to CAD Swiss. I know this one's been on our radar for a long time, CAD Swiss, and if you refer back to Julian's sentiment cycle he did in the webinar towards the end of June, really the CAD Swiss does epitomise this pretty well, and we've got the sheer panic, disbelief at this point here, and we've got the recovery point. We had the close actually above the level on the weekly time frame, which is good. So how do we trade this one now? I know people who trade reversals generally wait for price action based reversal. Those of you who trade supply and demand would have been bitten this time, unfortunately, because you've had such a good run before of the previous opportunities we've had at this point, this point, this point. Of course, with the 1, 2, 3rd higher low that's been put in since CAD Swiss has been recovering ever since 2015, it was bound that we'll get the breakout at some point. Okay, we had no other option or clue to sell this one apart from just simply placing the order on the level, which I know some of you do, and some of you do very well doing this. But of course, in a breakout market like we're having at the moment, all the losses do typically come at once. Okay, but those of you who trade price action based reversals, you wouldn't have had any clue or entry signal into this trade, so it'll be high and dry. So in terms of trading this one, then there are several ways of trading this one: as a breakout or a reversal, depending on how it goes. Remember that if we're trading it as a breakout, it's far more likely that it's going to continue in the direction, given that in Canada they've increased interest rates, and in Switzerland they're still negative, 0.75 actually, which is quite a considerable difference. And as we've given 3 higher lows, we've broken a multi-year level, it's likely this is going to continue. So how do we trade this one? Well, let's go to the daily and find out. All right, so there's several ways you can do this. Typically, when markets break out, they typically come back to test the level here, the horizontal level. Once support or resistance, in this case, support if it was a breakout to the south side, but in this case we've got the ceiling here. This is a level of supply, also known as a level of resistance. It's been broken and it's had the daily close above it, which is significant. But typically in markets where we've got an aggressive breakout, old resistance becomes new support. So what we'll quite likely see is price coming back to test this level before going up and making a higher high. I know you could argue, hey, we're quite overextended, but breakouts fail only when the breakout bar, i.e. Friday, has its low breached. Okay, so those people trading reversals, and bear in mind that 80% of reversals do fail, people who do trade reversals, they'll be looking to see if next week Friday's bar, which closed above the level, the breakout bar shall we call it, has its low breach. So they'll typically have their orders below Friday's low, stop loss above Friday's high. Of course, that would be pretty bad reward to us. Looking on the size of the bar, it goes against the interest rate differentials. Of course, you could reasonably expect people to be buying more the Canadian dollar, given that oil's making a marginal recovery and the interest rates in Canada are far higher than they are in Switzerland. Okay, so what we can reasonably expect for people who are going with the trend is for them to simply have an order on the horizontal level here with a stop loss below Friday's low, anticipating a retracement to this level, old resistance becoming new support prior to a movement to the upside. There we have it. Okay, there are many examples of where after a breakout, old resistance, if it's a breakout long, becomes new support, where price comes back and just tests it before accelerating the upside. Okay, so typically if we are looking to do that, which many of you would, going with the trend with the fundamentals like the interest rate differentials, it would make sense to have your order on the horizontal level just above it. That will correspond with the 50% retracement of, or just above it actually. If we look at the Fibonacci and take the 50% midpoint, it's just above the horizontal level. There we go. There we go. If your stop loss is just below the low, then the stop loss will be at the point of invalidation, which means that, okay, if our stop losses are triggered, then we can actually say that this is a false breakout on the daily time frame. Okay, and that would be a very interesting stop and reverse opportunity if, as and when we do get it. Okay, and we could reasonably say that the breakout has failed. Although, given the fundamentals really kind of like supporting this one, given the fact that, like I mentioned, the interest rates in Canada are higher than they are in Switzerland, and the fact that we've got a pretty bullish looking oil at the moment. You can see that based on the momentum, it's likely it's going to break this level here. Let's find out. If we get a bearish pin bar reversal on Monday, then we can reasonably say that, hey, we could potentially be looking at selling this. But actually, looking at the momentum into this trend line resistance, it's looking like we could potentially see this level, or indeed 54. Okay, so that's a couple of ideas for you going into early next week. Have a fantastic weekend, everyone. Please do let me know if you have any questions. The email address is tradingfloor@thelazytrader.com. Take care. Happy trading.